All right, you think it's been volatile and rocky now. Wait till you hear what my next guest has in store. A well-known bear, some call him like a Uber bear, but he is looking for something far, far worse, and in short time. How about Dow 16,000, which is about 8,000 points lower than where we are now, by April, which is only a couple of months from now. Let's go to Market Watcher, best-selling author Harry Dent. Harry, what are you seeing that others are not?
Well, Neil, first remember, I was one of the most bullish guys in the late 80s and 90s and early 2000s stuff. But yes, we've seen a bubble, go to unprecedented levels. We've seen in the last 2 years a parabolic rally, especially since Trump, and we did predict that when Trump got elected. And we've been saying once this rally breaks through the down trend lines up of the tops, which we've been flirting with on Tuesday, Thursday, and today, once it breaks below there, the typical crash from a bubble is 40% in the first 2.5 to 3 months. That is something most people don't realize, and I know I'm sounding bearish, even though I've been bullish long term. That is reality. If we break this level, we have not broken it yet.
Again, if we break the level, because usually a lot of bull markets, let's say the average correction when it reaches 10% is it gets to be about 13% and goes 4 months. If it gets to 20%, which would be a bear market, it can last 22 months, but nothing like what you're talking about.
Yeah, I'm talking about something that will last decades. If you'd have bought the market in 1929 or 1972 at the last major generational tops in spending, it would have taken 25 years to get back to those levels. I'm talking about something like that. But most important, Neil, I'm talking about protecting your assets because we could see the Dow down 40% by late April if this follows past.
All right. Now, when you say, how would you protect yourself in extreme sort of a bear crash here that you would look at? And by the way, many do not obviously agree with that. But what would you do to protect yourself? What would you tell investors to hold on to?
I'd be in long-term Treasury bonds, AAA corporate bonds. I'd be in cash. And you can be short things like stocks a little bit.
All right.
Just a little bit.
But those who have a portfolio of stocks right now, they've already taken a hit, just sell and get out?
Well, I hate to say it, Neil. I would say yes.
Really?
Normally, in normal corrections of 10 or 20%, yes, ride it through. This is not a normal correction. I think this is the beginning, potentially, of a major 80% crash and bubble like we saw in the early 1930s and Japan saw in the 1990s and stuff.
What could stop it? What could stop it, Harry? What do you think could break this up?
Neil, what have they not done to stop it? 9 years of free money, quantitative easing, zero interest rates, and now tax cuts. And at the top of corporate profit taxes of all time, corporate profits as a percentage of GDP all the time. What have they done not to stop it? What else could you do is my question.
Wow.
This is going to go down. Because they've done everything and they have nothing else they can do. What else are they going to do, Neil? Give me a suggestion. Send everybody a $10,000 a month check in the mail? That's the only thing they could do.
They might consider it, Harry. All right, thank you very much. Very good seeing you. Harry Dent, we got that view out there. You've heard from Uber bulls, Uber bears, those in the middle of the road. I think we try to cover everyone and let you decide on this. It's another sort of extreme position. Very few share that. We'll have more to this.